Let's go over right now, since it is a Wednesday. We're taking a look right on my screen here, the Tiger Forex Report by Teddy Kekstadt. This is one of our hidden gems on TFNN. You've got to check this out. Teddy releases an issue every Monday. It is very thorough. You're getting exposure to things that you're not getting in other newsletters. Of course, Teddy has spent a good portion of his life on these trading floors, CME, CBOE, CBOT. It is fantastic. I actually text Teddy sometimes when there's something that I'm not familiar with, certain concept, maybe different interactions. You get look into crude to currency pairings, which I think really makes this global financial market tick. So it is fantastic to have him on. Teddy, how are you doing?
I'm doing well, Jacob.
So first things first, you're having more headline-driven volatility in this market to an extent, right? You have the SPY ripping up. We almost reached 3% to the upside right now. Composite again up 3.7%. Crude dipped down very low. Now we're back up to the 63.51. One of the things I really want to talk to you about is kind of the validity of this move, right? Of course, you have the yields coming down quite a bit in the 10-year, in the 30-year. It seems like the SOFR rate on the 1 year is kind of improving a little bit today. Still somewhat, cost of capital is still somewhat elevated. And the USD Japanese yen is declining. The Japanese yen is strengthening to the dollar. I'm kind of curious what your thoughts are on this, what you're looking at, what you're seeing as far as, maybe a validity to this kind of move. Yeah.
Okay, that's a lot of markets to cover. Well, right now I think what you have is, especially when it comes to yields, they're obviously retracing on the day. They're going a little bit lower, and they're taking out the highs from last week, meaning it's an inversion in pricing. And so that's what you're seeing today. Now there was a gap between the close of yesterday and the futures and today's trading, yesterday, and it's been rallying since then. So big money has been definitely chasing lower yields since literally yesterday afternoon, and that buying pressure is really strong right now. So that's why you're seeing especially a retracement back down for the U.S. dollar yen. They set a nice low a couple days ago, and it's a profit-taking bounce. So now what you're seeing is, after the bounce from a couple days ago, now you're seeing the trend basically come back into full force in front of the PMI number that we have.
Yep.
So now I would be very cautious on a daily basis looking at this as far as a trade. Okay, this is a very reactionary trade going on right now, and you want to trade the action, not the reaction. So reactions when a lot of traders get chopped up. So be very, very careful with this right now. You mentioned the SOFR rate. It's come down, the cost of capital a little bit. Now a lot of people, when they look at that rate, especially like historically it's been closer to 2%, whatever. You got to realize that the SOFR rate hasn't existed for very long.
Right.
It replaced the LIBOR. So you're looking at something that is really basically a very short-term indicator because it has no long-term history. Okay, so there's no real validity as far as where it's moving in the short run or the long run right now because it doesn't have any serious trends to it. Okay, so LIBOR doesn't exist anymore.
Right.
But when you look at the rest of the yield curve, like I look at the euro dollar, not the currency, but the actual interest rate, which is American dollars on time deposit in Europe, that rate, okay, when I look at that as far as the short term, because that's a short and long term view because the euro dollar goes out every month for years, okay?
Right.
So that's a very big interest rate indicator that most people don't even look at. Futures traders definitely do, but most cash traders and most regular derivatives traders don't even really look at the euro because on a daily basis it really doesn't have a big move. It has had a very big move on a monthly basis. Like it's really, really breaking out to the upside. So that's where I think you really have to look at as far as what's driving yields right now is the short-term rate, especially when you have this confirmation from the euro dollar itself. So that means the broad base of short-term money, no matter what, for yields is leaning on the shorter end of the curve right now. And I think that's what you have to look at. So when you see, like, for instance, from yesterday's low in pricing to today's high in pricing for the 10-year and the 30-year, if you will, okay, it's a very nice move, especially the gap between the closes of yesterday and this morning, okay? That just shows you how much buying pressure there really is with this move, Okay, so now, but it's also sideways. This just means we're pushing the upper boundary of the range we've been in for the past week and a half, and then going back up into the middle part of the range where we've basically been for the past 6 months. So I'm not getting over excited about the fact that we're just chopping around in a range trade.
Right.
You know, you have to really look at it take it away from the daily basis and spread it out, and you realize that there's really not a whole lot going on. There's just really a lot that's going on since yesterday's trade, if you will.
Understood. Yeah, fantastic. It'll be of course very interesting to see how this plays out. And then again with the headlininess, I guess, of this entire market. I mean, of course you have Besant coming out. This can really move markets to the upside. It can maybe trap people if things aren't fully improving on these kind of fundamental levels. Teddy, what are you kind of looking at regarding light sweet crude or just oil in general here? We're trading really in a range around, I think, about 65 to 70. We dipped down to 55 and we're right under 65 currently at 63.71.
Sure. Let me pull it up real quick. So we got the crude. And why is this not doing this? Let's see. CL1. There we go. Okay, so as far as the crude, we talked about this with Tommy. We set a nice low back 2 weeks ago, and that was when we got down to that 55 area, 56 area.
Yeah.
And back then I told him, I'm like, what I'm looking for is this is a good bottoming area, at least in the short run, and then to possibly retrace back up to the 60 to 62 area, which would be the lower part of the range where we started to bobble around for a couple months. And if, support becomes resistance. So I think we're coming into, that question is previous support going to become resistance? And I think that's what it is. I called for this a couple weeks ago that once we hit this 55 area, from 55 to 62, 63, should expect a little bit of a range trade with a lean towards selling the rallies and making new lows again. Okay. So, and I think that you will see that over the next, month and a half to 2 months. Like, oil is not, it is trending lower, but it's not in a violent trend. It's not like parabolic like gold is or anything right now. You know what I mean?
Yeah.
So, and I think that, when you look at it in that context of momentum, it's a long-term trend play. So like I said, you look to sell rallies and you look to take profits on the lows.
Fantastic. Well, Teddy, we're coming into the break now. Thank you so much for coming on. It's always good to talk to you. Folks, I really got to stress, you got to check out the Tiger Forex Report. It's a great report. Every Monday it comes out. Teddy, thank you so much.
Have a great day, Jacob.
You too, Teddy.